Good morning, traders. Britton Brown here with Trade Hive. Let's just get kind of into this thing. Last night was somewhat interesting, especially after yesterday. As I mentioned, what what's really interesting is the volatility that's going on in this market today. So over the last several weeks, and as I mentioned, we are in this massive consolidation pattern. If you look at the daily, and I'm going to pull that up here. But most importantly, it's really just kind of keeping yourself from getting trapped um, in this whipsaw of a market. And as I mentioned, I'm going to pull this up, sorry. As I mentioned yesterday, the institutions are trading in this range, right? So premium to discount. And if you're not aware of that, it's really easy to get trapped in thinking that these shorter time frames are more developed in a trend than they really are. So, um, with that said, looking at the daily here, we're still below that daily bull trend line that broke last week. The 9 EMA is still above the 32, so that's important to understand. But stalling before premium zone of the bigger consolidation area is one of those things that you just need to understand and look out for. So I know that there's a little bit of traders. A couple of trades went off for close to 70 or 80 lots up near the highs last night. Just kind of reviewing Bookmap. Um, and then looking at some of my other programs, you can kind of see them come in and get stuck. We have not cleared them out. So, they're bigger traders. I don't think they're really worried about a 10 or 20 point move against them. However, where they will get flushed out is if we go make a new low from the overnight session, which is really pretty much that's where liquidity is going to be hanging out. We had a brief push on the reopening at 5 o'clock Central, 6 o'clock Eastern time, and then a stall, a return. And so I'm going to be watching a couple of key areas, and you should be too. So bullish continuation attempt. If we hold above the trend structure and grind higher towards the range high, probability wise, the market's rocking. So that's a high probability of 55%. A rotation or range continuation sits at 35%, and that's kind of what I'm more suspect about, which is a stall and fade back towards value. And then a total failure, roll back into discount zone where we were overnight Sunday and early Monday morning. That only has a 10% risk. So what is the tell? If price cannot reclaim, pardon me, cannot reclaim the broken daily bull trend line, upside becomes work and rotations back to value becomes more likely. So I'm going to flip over. Let's get over to the 4 hour because that is our primary control of this actual market. So hang on, let me flip over. And you'll see volume profile up. And what's the point of control on volume profile, if you're not familiar with volume profile, is something we need to consider. We have this tight, or I shouldn't say tight range. This is a big range, right? But we have an area that we're predominantly doing business in, and this 4 hour, after the big sell-off, we found into discount, we found support. Now we're headed back up. These used to be back in the day. These were weeks of a move. Like it took weeks to do this. We're doing them in a day, in an hour or two. It's pretty crazy. So, the things that I would plant in your head for you is that, as I mentioned yesterday morning, there were huge buyers down in discount. The long-term trend has to be protected. Yeah, I mean, as a trader, you have to understand that. Just go look at the COT report I put out. Institutions are grossly long. They're always grossly long. And so there are areas that are gimmies. You should have been a buyer down there. And it's super scary. But you know what? I learned a long time ago, a trader told me, oh God, this is probably 30 years ago. Sometimes the best trade is the toughest trade to take. And it's so true. And that has been passed on to, that's not some original thing. That just kind of gets passed on from generation to generation on the professional trader side. Those are the tough trades to take. They look vicious, they look nasty, and yet if you look at a broader view, a macro view of the market, you go, that was a no-brainer, right? We saw the buyers come in. We saw, and when I say buyers were coming in, they were coming in droves. We had somebody take a position in the market around the 25,400, and the overnight. I think it was like 8 or 9 o'clock Sunday night, and they bought 1,400 contracts there. Then the market finally cleaned them up and went lower. We got right into that zone where all of a sudden we had a big snapback, and when we came out of it, I mean, they were buying 50 lots at a crack, which is amazing because it's like, well, who's selling, right? Like, and some of that selling is hedge side of things. Some of it is coming into the early morning. You had the market makers that are playing the zero DTE market. They are covering. They're on both sides of this market, and when you start getting through call walls, they're going to really push this thing in a big way to cover their risk. So, it's not like everybody's, I keep saying this, like, because I keep hearing from retail traders that like market makers just make money. They do print money. They wouldn't be in the business if they didn't do that. But the reality is they lose money too. And when we start breaking through those thresholds, they are getting clobbered and they are trying to cover their positions. The ideal market for a market maker, believe it or not, is a range bound market. They love it. They eat it up. They make tons of money in it. And so if you look at the market as an overall, we spend about 70-80% of our time in consolidation, and then we break out. So, one of the interesting parts is as I go on. Sorry, I digress, but sometimes this stuff is important. But let me just get back to it. I apologize. The 4-hour is the main driver. Point of control is the most prominent area that I think we're going to revisit, which is 25,708.50. The range, this is this huge range that we're playing in right now. We've got to get above 25,944.25 with conviction, and right now we are over that. But we're getting ready to walk right into premium again, and so I'm waiting to see, do we come back into that range of 25,236 to 50 to 25,944.25 and then rotate back down to that point of control, or can the buyers really come in and show us that they mean business? We had a great volume profile yesterday, and you can see it on a 60-minute, but a big P shape, right? A pullback, and then a go, and then another pullback into it. So the buyers are defending, and they, quite honestly, they need to defend. So we're trying to find buyers above the range highs, and we don't really have at this point anybody of substance saying, hey, I like this, let's go up and make new contract highs. So I think that, again, if you bought down on the lows, are you telling me that the big institutions aren't going to be taking risk off the table up here? They're going to be your main sellers. I'll just tell you that right now. That's a no-brainer. So anyway, look for the rotation back to that point of control is the point. Acceptance above the range and hold is 35%, whereas the rotation back to the point of control is sitting at 50%. A failure back into discount is 15%. So again, the tell for the 4-hour is, do buyers take control again above in this area and push higher? And then keep it up here, or is there a rejection here? And then we rotate back. On the 1 hour, this is the most interesting chart because, you know, the 4 hour is the driver, um, but the 1 hour is the high volatility. And what you're looking at here is you can see that green box with a red trim on it. We have no problem hitting the lower projection. That was a basically 290 point move to the downside. We hit that overnight, and then we responded back to the original. Once we saw the buyers coming in, it was fair value. That's that the middle of that box, and that happens to be just above the point of control on the 1 hour order flow profile. And so, with that said, the market's trying to find some stability here, just like the 4 hour, but that is a high volatility box, right? So just understand it's kind of the same process here. We have an upside target of 26,144.25, but you'll notice that the first upside target on here, which was a 247 point move from that fair value, didn't get hit. That's the original. We go up, we come down, we go back up. That's the projection off of the lows. We don't meet it. We go down, we make projections on the downside. We come back up to that fair value. Now, if we can't get enough substance here, enough drive by those buyers, that we get back into that bull trend and we don't make that first original target, how the hell are we going to make that second target to the upside? That becomes very bearish. And then I start thinking, hey, we may rotate all the way back down into discount again. And again, you go, this is crazy. I know I do. But that is the market we're in. We are in a humongous consolidation pattern that started a couple of months ago, and we are just whipsawing back and forth because we don't have much of a reason one way or the other. So on the 1 hour time frame, as I mentioned, the current driver is the green box with the red trim. Fair value sits above higher time frame POC. That's point of control, sorry. Upside projected target, again, is that 26,144.25. Real efforts start above the 26,036 mark. If it doesn't make the upside target and rotates, the selling is going to return with speed. Bias is going to flip bearish quickly. If it jumps above the 26,036 and then stalls, you're going to see sellers come in a hurry. So the probability wise, again, 40% completion to that 144.25. Fail at or near the 2636 sharp rotation lower. That's our highest probability at 45%. And then really chop and absorption, no expansion, messy two-way is sitting at 15. So the 1 hour tell, again, is the line in the sand at 26,036. Above and hold, target becomes likely. Above and reject, bulls trap, fast unwind risk. So that's what I got for you today. I am thinking about going live. If I do that, keep an eye out. I will be on the YouTube, but I will leave you a code to go to meeting to get you into a trading room. And the reason I would suggest making that flip, there's no cost to it right now for you to do it, is because there's a latency issue. If you watched anybody on live trading, by the time you get the information on YouTube, you're about 10 seconds behind. That trade's gone. So if I do that, I'm going to be calling the market. I'll let you know when buyers are getting absorbed or sellers are getting absorbed, what the market is. I'm not going to give you the trades outright. You're going to have to make that decision for yourself, but I will give you a pretty good idea of what's happening internally inside those candles, where the momentum is, and hopefully make you, if you're trading,